Hello, my name is Kei Natashima, and I am president of CELSYS, Inc. It's my pleasure to present the financial results for the fourth quarter of the fiscal year ended December 31st, 2023. In 2024, CELSYS stepped onto a new stage. In 2023, the group implemented business and structural reforms, including the sale of its UI/UX business. With these reforms, the group can now devote its undivided attention to business, offering total support from content production to content distribution, aiming for a new era of growth. Let's talk about dividends. The company recognizes that return of value to shareholders is an important management issue. In terms of dividends, the company's policy is to strive for medium to long-term growth by maintaining a sound financial footing while distributing stable dividends based on a dividend payout ratio of 30% or more. In the fiscal year ending December 31st, 2024, we're implementing some changes to dividends. The company plans to distribute an interim dividend for the first time. We will distribute an interim dividend of 10 yen and a year-end dividend of 10 yen, for a total dividend of 20 yen per share, up from 12 yen per share in fiscal year 2023. Now, I'd like to turn to the company's acquisitions of treasury shares. To improve capital efficiency, establish a flexible capital policy, and enhance return of value to shareholders, the company will begin acquiring treasury shares for 1 year starting March 1st, 2024. We aim to acquire treasury shares worth 2 billion yen during this time. The company is also reducing capital. To prepare for implementation of an agile and flexible capital policy, the company is reducing share capital to 10 million yen and legal capital surplus to 2.5 million yen, thereby securing other capital surplus of about 5.3 billion yen. Through this capital reduction, the company aims to strengthen return to shareholders. The consolidated statement of income for the CELSYS Group for fiscal year 2023 is as follows. Financial results by business segment are as follows. This is an overview of the Content Production Solutions business. Net sales in fiscal year 2023 were 6,007 million yen, up 11.4% from the previous fiscal year. Operating profit grew 9.3% from the previous fiscal year to 2,177 million yen. Both figures mark all-time highs for the company. Here you can see the indicators for Clip Studio Paint, our mainstay product. Each of these indicators is trending upward. Please note in particular that annual recurring revenue as of fiscal year 2023 is 3,236 million yen. This is an overview of the Content Distribution Solutions business. Net sales in fiscal year 2023 grew 5.3% from the previous fiscal year to 1,012 million yen. Operating loss was 744 million yen. This is an explanation of our forecast of financial results for fiscal year 2024. Net sales are forecast to decline 4.5% from the previous fiscal year to 7,723 million yen. Operating profit is expected to rise 22.3% from the previous fiscal year to 1,655 million yen, the highest in the group's history. Now, I'd like to turn to our investment policy for the Content Distribution Solutions business and our review of the medium-term management plan. In the Content Distribution Solutions business, the company completed development of the basic functionality necessary to provide the DC3 solution service in December 2023. The company aims to promote expanded use of the DC3 solution by enhancing the compatibility of Clip Studio Paint and bolstering sales activities. Through these efforts, we expect to nurture new revenue streams. In fiscal year 2024, the DC3 solution will transition from the initial development investment phase, in which the business was established, to the operational phase. The sales plan for this period is ultra-conservative, as it is set at a level that includes only sales that are expected with a high degree of certainty at the time of formulation. As such, revenues may change significantly from fiscal year 2025 onward, depending on the financial results of fiscal year 2024. We expect to review the medium-term management plan formulated in fiscal year 2023 at a later date. Formulating a new medium-term management plan when close scrutiny of the results, particularly for the DC-3 solution, can be carried out. Investment in the development of DC-3 will be with a view to maintaining a group-wide balance of revenues and expenditures. Having provided for the growth of group earnings and for sufficient return to shareholders, the company will devote its remaining resources to growth investment for DC-3. The group's profit plan for 2024 forecasts operating profit of 1.64 billion yen, in line with the figure in the existing medium-term management plan. The company plans no significant changes to the activities of the content production solutions business.